Good evening, I'm Giuseppe Basile, I'm the analyst and trader. You can find at the website www.fipstalker.com. I also post regularly on Twitter using the Fipstalker nickname. Good evening, today is Monday, March 24th, 2014, and it's 11:30 p.m. Time in Toronto. In this video I'm going to review for you four markets, a daily update that I am sharing on my website, and in this video I'm going to review for you the euro-dollar pair, the S&P500 E-mini future, the dollar index, and gold E-mini. So I want to start from the euro-dollar, which is the chart that you see on the screen here. Now, you will remember that in this market we had a sequence of measured higher from the lows at the beginning of February to the highs mid of March here. There was the first sequence bringing price into first target. Price went above first target but was not able to move to second target, so we had another extension here from lows to highs, traditional move, and that was from 136.70. As you can see, we hit first target to the pip 138.23, and then market retraced. The next measure move failed, but the market continued higher, as we can see here, and there was a failure here around 137.12, but market went into first and second target, and after we got into the first target, I mentioned that trade, and I called this trade from highs to highs here, which brought price with full participation at this 138.43 and brought price into first target. After that, the next measure move failed, and as you can see here, from lows to highs there was participation initially, and then price actually broke this level and went to break also the next extension long from highs to highs according to rules, and as you can see here, this 138.44 was broken on the downside, and when that happened, that's an indication of change in trend. And then I said that we would probably see this market moving lower into at least this one level from lows to highs. This is 137.21, and it's the next level of support for the euro. We need to study what happens in this market. Yesterday, my weekly review that I only distribute to my subscribers, and you can subscribe for it for free on my website, I mentioned a sequence of measure move and the next level in the sequence. We actually got participation here at this 138.14, and this trade also generated a free risk trade, this level of resistance. But of course, we need always to be careful in this market. We can never assume anything. This market actually initially respected this level of resistance 138.14, as you can see here. There was participation on the downside. You could get a free risk trade entering around 138 with a stop above 138.31 here, and then you could actually exit half at when you had a gain which was equal risk here. On the 15 minutes, you can I'll also show you when the sequence of measure move lower here failed, and that would have been an early indication to exit. So we have always to be careful. We know now this market is going lower, so you also know very well that the retracement from highs to lows here, 138.60, are very high level, and as you can see, very high level probability trades. And you can see here trading this 138.57 with a stop above 138.84, which is about 28 pips risk here, would have given you already a free risk trade. This level of resistance is the first target 136 136 137 basically, and but we know that the first level of support it's slightly lower, and it's identified by this retrace. So congratulations if you got short. That was the trade. You know, always the old wave will be back after a violation of the longs. It's always a short, and this was a short, and now we need to see what happens when price moves into 137.21. If this price retests this 138.57 tomorrow, that's an opportunity to enter short and drive this market lower. Moving to the S&P 500 mini futures, you will remember that I indicated that this level was a level where price was picked up by retail traders and by program trading on the smaller time frame, because there was no support, significant support for this market at this level from program trading. The first level of support for this market comes at a trace that we can identify from these lows to highs here, as we can see here, and that's 1803, and that's where we are going to probably see this market. Now when we move into the smaller time frame, the 4-hour time frame, yesterday I've indicated the level of resistance on the 4-hour time frame, and I said that we had a sequence of measure move here, and what happened is that this market actually, as you can see here, barely failed this level, but this was enough for shorts to start trading this market lower. And as you can see, the first measure move short here, you have to be always careful that to the first measure move short is the very high probability trade here. Found the resistance at 1866, and we're pressing to first and second target. So now this market went to the second target, so what the first thing we would do is to see whether there's a continuation short, and that didn't happen. So there is now a possibility for this market to I also wanted to, before I complete that comment, I also want to show you that this market with today's move also broke the all the way halfway back here. So there is a possibility now for this market to come all the way halfway back again from highs to lows. And if that happens, this would be a good opportunity to enter this market. This level would come at 1859. However, if the order flow on the short side is strong, there is a possibility for this market to correct only to this 1853, and we saw already participation on the short side at this level. So if we get again to this level, one way to trade this market would be to short this level with a stop above 1863. So 10 point risk here for the possibility to bring price into 1832, 1835. So you're around 2 to 1 reward to risk ratio in this trade. On the dollar index, I was anticipating retrace into the extension long for a continuation higher, as you can see here, and but the market corrected much lower here. So this market is finding resistance at 80.50, and instead of bouncing at this 80.10 here, it went to trade all the way halfway back again. So we need to see now whether this market will show convinced support. As we can see here, we already saw support this at this 79 and 93.80. basically we need to see whether this market will be picked up and This first thrust higher would suggest that, and also the situation on the euro dollar would suggest that, because the sequence of measure move higher, extension higher in the euro dollar has failed. So now we are anticipating a move to at least all the halfway back, as I showed you in the chart before. Finally, moving to the gold versus the the gold commodity mini future here. We saw some participation yesterday at this level of extension long, and price actually started reacting at the level, but eventually it broke today. So now we know that this market is headed towards the all the way halfway back from lows to highs, and at the moment the market is priced at 1311 as the and will move into the 1285. So I will remove this level, and I'll show you after the fact, not something I could identify before, but only after the fact. But the market now shows tipped its ends here, and we had a participation from lows to lows here, as you can see here now very clearly. Not something we could anticipate, but now that we got it, we can use this information. 1341 is a short, and if on participation, and progressing to 1311 here, and there is now a possibility for this market to just continue lower. And if that's not the case and this market retraces, we are going to use the same anchor. So if we retrace, the next trade short for gold is going to come from these lows to lows, and it's going to come at 1334 with a stop above 1341.20 here, and this would be actually 34.41 would be a 6.5 points here trade for a potential 1285, a potential 50, almost 50 50 points trade. So it's quite a good reward to risk here, that we can so it's not 50 points, but it's 40 points. So quite a good reward to risk trade here anyway. It might be 6 5 or more, 6 or more here. We'll be very careful and mindful of this 133.34. Of course, there is just a possibility for excuse me, it's just a possibility for this market to continue lower. We don't know what the market is going to do. And we had this measure move in place. Price will just continue into 1296, in which case we'll just wait for this market to test the 1285, and we will see what happens then, because if we just continue lower, we will have this anchor instead to use. And once and if we test in this second scenario the 1285, we will need to see what happens here, and the confirmation of this level 1285 acting as support will only come above 1308. Now this is it for this first daily review for this week. Be very mindful of what we have here in the dollar. This is a good opportunity to enter short into 137.21. Thank you very much for your attention. I wish you a very good evening and a great trading week this week, and thank you for watching this video, and talk to you soon. Bye bye now.